Cool. Uh, Welcome everyone. This is Vishal Chawla, blockchain ecosystems reporter here at the block. And I'll be a host for today's webinar on safeguarding digital identity in Web3. I'm excited to be moderating this discussion with our panel of experts with whom we'll be exploring the challenges and opportunities when it comes to digital identity and custody solutions in the Web3 ecosystem. We'll get into how organizations can protect their assets from hackers and onboard the next billion users into the digital asset space. Our panel of experts include Adam Lowe, Chief Product and Innovation Officer at Arculus, Jonelle Still, Director of Investigations at CipherTrace, a Mastercard company, Alan Scott, co-founder at Railgun, and Johann Bornman, product lead at Metamask. Before we deep dive into today's webinar, I'll let our panelists introduce themselves, where they work, and their roles there. Adam, let's start with you.
Sure. I'm Adam Lowe. I'm Chief Product and Innovation Officer at Arculus and CompoSecure. Most of your listeners probably are familiar with our CompoSecure product, even if it's not known to them. So if you have a metal card in your pocket, it's highly likely that we made it.
Awesome. We'll go to Jonelle, then Alan, and then finally Johann.
Yeah, sure. Good morning, everyone. Good afternoon, everyone. My name is Jonelle Still, and I am Director of Investigations for CipherTrace, a Mastercard company. In my role at CipherTrace, we do consulting investigations that includes all fraud, cryptocurrency investigations, ransomware, terrorism financing, human trafficking, and education as well in the space.
Cool. Yeah. Hey, everybody. I'm Alan, joining in from North Carolina. I'm one of the co-founders of the Railgun Privacy Project. I guess I don't actually work for like a company or anything of that such, just more of a online degenerate working on privacy in the DeFi space.
That's a very tough act to follow. Good morning, all. My name is Johann Bornman. I'm the group product lead for Metamask Institutional. We are a Web3 institutional platform that provides unrivaled access. We do so with the most trusted wallet in the space, Metamask. And then around that, we've built a range of capabilities to cater to institutions, namely key management, both self-custody as well as custodial wallets, and then reporting, monitoring, allowing institutions to manage, monitor, control their Web3 assets.
Awesome. Thank you. So we'll get into the questions. And for a general overview, I'd like to open this one for all the panelists. As we move towards a decentralized future, how do you all see self-custody and decentralized identity solutions, impacting the future of Web3 space and maybe, the overall financial space? So let's go with Alan, if you don't mind. Alan, I think you're muted.
Oh, I am on mute. Thank you so much. Yeah, so I think first, right, self-custody is, it's probably one of the unifying factors of like the cryptocurrency movement, right? Everyone knows the mantra, not your keys, not your crypto, right? And I think this rings true for like every crypto tribe that exists, right? Whether you're a staunch Bitcoiner or you're in some altcoin community on Discord. They all let everybody as an individual own their assets, right? And this appeals to everybody in the crypto space. But I think that there's definitely a lot to be, there's a lot to be desired still in the cryptocurrency space when it comes to self-custody. And I think there's a lot of stuff that kind of needs to change in order for it to like truly disrupt finance like everyone wants it to. So I think that, optional account level privacy, for example, is something that needs to happen. I think the ease of use needs to improve by like 100x probably. But most importantly, I think it needs to become like really boring. Right now what we're building is probably more akin to like the lower infrastructure levels of the internet, right? The substrate, so things like Ethereum that excite us now and all the EIPs and things like this that get everybody riled up, should become as boring as like TCP or IP or something like this, right? And self-custody should be built into this, but I think it should be like, it should be seamless and intuitive. Until we do that, I think we'll end up being like an odd curio that your friend talks about when, they spend too much time in front of their computer or something like that.
Cool. Jonelle, I'd love to hear your thoughts about this one.
I mean, yeah, Ellen, I think you hit the nail on the head with respect to user experience and also having improved security, convenience, that being the boring part, right? When it's convenient, people won't even need to think about how to do it or how to store their private keys. That's going to be taken care of, I think, for them. And I think especially I'm excited about EIP 4337, like account abstraction, enabling account recovery, reducing the stress and the friction just of like trying to sign up, right, and get an account. I have to figure out how to store my seed phrase if I don't already know what a seed phrase is, right? So there's a certain level of education that one needs to reach in order to be able to sign up and engage in this space right now. I think one thing I would like to see is that more financial products being built, and I do think that this will happen kind of in the future. But more companies are entering the space. They want to offer financial products, and those products can be offered to those who self-custody. So not necessarily needing to sign up on a platform or become that specific customer of that platform, but instead you can just connect your wallet or become a user of that platform and remain self-sovereign as well. I think one thing I'd like to be able to do is like pay my bills with my wallet, right? And so building that infrastructure so established and new industries can offer their services using crypto and other digital assets. But going back to that private key thing, I think it's important to note that so as an investigator, right? So I'm investigating fraud scams all the time. And so according to like over 60% of CipherTrace scam data, so this is self-reported, right? So these are people who were victimized by scam, other fraud, including phishing, including investment scams, right? So not necessarily just giving up access to their private key or somehow exposing their private key. But over 60% shows that at that time when that person was victimized, they were self-custodying. So definitely we need things to be more secure.
Yeah, I'd absolutely love to build on that. I completely agree with all the points that people have made so far, and that's kind of exactly what we're building with Arculus. So for people not familiar with Arculus listening, Arculus is a smart card-based hardware wallet. So your entropy is generated on a certified random number generator on the smart card, so you get true entropy. And then your private keys are generated on card, never leave the card, can't be ripped out of a phone, can't be ripped out of a cloud. So the advantage of what we're trying to build and add to the community is that it's exactly that, it's payment. It can also be a financial instrument because it's a smart card. So it can do Visa things, it can do things on Web3. And importantly, when you're logging into some of these centralized platforms, as we transition people from Web2 to Web3, it can even be a FIDO authenticator. So I agree and think that our digital future is going to be managed and secured with digital keys. And we have to think about how to do that in a seamless and easy way for people. And that's what we're trying to build, working with people like Visa and Mastercard, working across Web3. And yeah, I completely agree with Alan, we have to abstract away the complexity, right? So whether it's, approve and transfer with authorization or, pick your favorite EIP, there's a lot of great ways to do that. And so it's just, tap to transact and nobody has to think about it.
Yeah, I think the last 12 months have been a stark and visceral reminder of the risk of trusted or so-called trusted intermediaries. And I think that within consensus and we within Metamask Institutional would say that it has always been about decentralization. It will continue to always be about decentralization. And I think we need to have a thoughtful conversation around like what already has been decentralized, what are we working towards being decentralized, and kind of what it will be decentralized in the future. And I think sort of the vantage points of speaking from the institutional world, we have seen, real permissionless innovation within Web3, specifically within DeFi. And I think, as Jonelle has mentioned, we're starting to see just fundamental better infrastructure being built. And that allows for the creation and transfer of risk in a fundamentally better way. When it comes to key management, as some of the panelists have referenced, though, I think when it comes to institutions, there's a very important nuance to distinguish. We see a trend where far more institutions are aiming to become self-custodial, but very importantly, not everyone can be. If you are a certain institution of a certain size, regulated by a certain regulator, you often have to work with a licensed custodian. And this is sort of a big part of our mission. How can we make sure that regardless of your key management strategy, regardless of where you are, which jurisdiction you're in, we can cater to those needs. I think the final thing to think about is like, well, how do we bridge then more individuals or the next billion, as the question sort of phrased it, into this ecosystem? And I would say it's about also thinking about how can we bridge organizations into the space? How can we build the services, the tools to help them seamlessly bridge into Web3? And I think some of the panelists already mentioned some of the exciting innovation in the space. Account abstraction was referenced in EIP 4337, and thinking very deeply about how can we decode transaction parameters, build solutions to, make the risk management around the ecosystem far better.
Yeah, and to that point, you can have the best key management structure in the world for the institution. And if the user experience is bad or the individual user account security is bad, that's where we've seen a lot of challenges. And that's where in the institutional side, we're having a lot of conversations for hardware keys for accounts. So central private keys are managed in the custodian, which they should be on the institutional side, but individual account level management was challenging. And that's where we're doing a lot with FIDO hardware keys to manage login for individual users.
Yeah, those were great points. Adam, you mentioned CompoSecure. Can you speak to your experience transitioning from traditional banking and payment space with CompoSecure and then to the hardware wallet business that you're in right now? How has this background influenced the development and approach of Arculus hardware wallet solution that you're offering?
Yeah, so I think the transition's gone well, and it's very different mindset in different spaces. So people don't realize it, but every credit card that you're walk around with is a little cryptography engine in your pocket, right? It's a little 16 or 32-bit, cryptography engine. And some of the older systems would just do RSA keys and DES keys and certain older sets of keys. What we've done is we've added elliptic curve technology to that same type of cryptography engine that's allowed us to do, FIDO authentication and private key management for, pick your favorite blockchain. So what we've done is on a secure element. So it's a secure piece of hardware that is extremely difficult to penetrate, right? There's billions of smart cards around the planet that have never been penetrated. And we do that in a form factor that's easy for people to use. So, we have banks that trust us with their keys in our HSM for some of the largest banks in the world. So given that experience, we've made national IDs and manage technology there too. We thought it would be a good place to transition into helping the average person easily manage and securely manage their private keys.
Yeah, I'll definitely love to hear Johann's perspective. As one of the most widely used Web3 wallets, Metamask plays a crucial role in helping people transact in crypto assets. Johann, can you speak to the measures that Metamask and Metamask Institutional take, to ensure the security of users' assets?
Yeah, it's an important question. So first and foremost, maybe sort of a quick and important sort of nuanced point in that Metamask Institutional has the exact same code base as Metamask, so we have exact same feature parity. And very importantly, I think it's sort of important to step through the deep security culture of the Metamask team. It's I don't think an embellished point to say that Metamask is one of the most trusted wallets within the DeFi ecosystem. It has more than 30 million monthly active users, and the team bears a huge amount of responsibility to make sure that assets remain safe and secure. And so security is deeply embedded within the culture of the team. I think there's often been sort of a stance with the ecosystem that, the team isn't shipping quickly enough in terms of new features. But if you think of the responsibility that they bear in terms of making sure that the wallet remains secure and safe, I think that's very much a first and primary consideration. There's a lot of product experiences that persist within Metamask today to help users stay safe. And that's also reflected within Metamask Institutional. So for example, users can report sites for phishing, and if their wallet tries to connect, a Metamask wallet or a MMI wallet tries to connect, there will be a sort of a large warning that this is a phishing site. Very importantly, we also decode transaction parameters. So that means at the point of transacting, we actually decode what the transaction will do and provide it in a more human readable format. Users can then label also addresses, so add nicknames to make sure that they're interacting with the right sort of white label addresses. And this is obviously very important. We've recently seen poison attacks become quite popular within Web3. And there's also sort of nuanced points around ERC20 approvals. So Metamask and the Metamask Institutional allows you to set spending limits in terms of the allowances that you are giving contracts. And so all these are sort of, user experiences that are available within the wallet today. Very importantly, also, there's a Snap ecosystem being built. This is sort of a plugin system that allows developers to build on top of MetaMask. And there are a range of different snaps being built specifically focused on security. So decoding transaction parameters, showing you how the transaction will be simulated and what the end path of the transaction will be. Within MetaMask Institutional, we've also built additional capabilities around the wallet to cater to institutions, as I've referenced earlier. And so a lot of things we think very deeply about is, again, what is that important institutional user experience and how do we keep our users safe and secure? And that normally starts with key management. So as I referenced earlier, we work with, we offer both self-custodial solutions as well as custodial solutions for organizations. And so there's that aspect of key management in line with their needs. And this means that they can build not just multi-sig or MFN signing processes, but very importantly, governance policies, allow listing of smart contract calls, allow listing of DApp URLs, building in sort of the policies and procedures that an organization needs in order to transact within Web3. And then lastly, we've just built a transaction simulator to again do the exact same thing, run through the path that an organization might go through as they're interacting with different smart contracts. So we can show them the path of that transaction and then keep them safe. The other thing that I might mention that a lot of people don't know that many of the Web3 primitives that are natively within MetaMask and also MetaMask Institutional are built very much to keep users safe and secure. So most folks would know that there's a swaps primitive that exists natively within MetaMask, and there's a lot of work being done within that product to make sure that not only do we optimize gas fees for users, but we actually route them down the path that will make sure that the output of what they wanted is actually results. So we actually keep them safe by not having them interact with a malicious contract. And we also have token APIs that we've built to make sure that we don't surface scam tokens to the user as they're kind of swapping through the experience. So there's an awful lot of consideration to make sure that we provide security throughout the Web3 primitives that we offer.
Yeah, I'd love to add on that from the builder side perspective, because there's a lot of really great points. I think like a lot of modern crypto users take for granted one of the points that you made, which I think is a really great point. It used to be that if you weren't really tech savvy, you were blind signing transactions, right? So you get a transaction request, and this transaction request would be like 0x gobbledygook, gobbledygook, gobbledygook. You wouldn't really have any idea what this transaction meant unless you were able to copy it out, decode it. You wouldn't have a clue what you guys, what you were signing, right? And so MetaMask users, they are afforded some really great decoding on the backside, which is actually really quite complicated. Having it say something like give this app permission to access your wrapped ETH or your priceless NFT isn't actually really easy UX, right? This is actually pretty complicated tech. So, hats off to the people building that kind of stuff. But I think also on the application side, we really have to hold people accountable for how they're actually setting up approvals. So we can take in, so for example, if we look at how Railgun works, we generally try to have really good security practices, or at least the contributors writing code, and everything's batched in multi-calls, right? So there isn't an unlimited token transaction or an unlimited approval transaction. Every transaction explicitly specifies what you're doing in that transaction. So it's not approve, the Railgun smart contract to access your wrapped ETH. It's approve this certain amount of wrapped ETH for this transaction to call the 0x API to swap it for Y DAI. And that statement sounds really heady, but suffice it to say, setting up your transactions in this way as a builder, right, really kind of cuts out a lot of that ambiguous nature that users can experience, where it's I unlimit approve transactions to happen with this smart contract with all of my ETH. And then later they found out that there's a foot gun that allows them to yoink all their money out of their wallet. And so like making sure you have like builder discipline on the other side of that, I think is, equally important and isn't just like on the wallet provider to, protect everyone, if you will.
And I'm curious, did you see the Kevin Rose hack last night?
Yes, I did actually. I'm not gonna lie. I look at my notes, right? And that's part of my notes, because I think a lot of people don't really consider it. And for people who are listening who may not know, Kevin Rose signed an accidental malicious transaction, and someone yoinked $1 million worth of NFTs out of his wallet. They stole his stuff, and it was from a malicious signature. Really, really unfortunate stuff. And so, like, we really just got to be careful. I'm a pretty avid MetaMask user, not gonna lie. I actually have we're talking about everybody here. I have an Arculus hardware right here as well. But suffice it to say, like, you get really used to like clicking pretty quickly, and like some of that onus, I think it's like a trifecta of onus when we talk about like security and making sure people aren't like victim of dubious activities online, right? This is up to people on the wallet side to make sure that people aren't blind signing and making sure the infrastructure is secure when it comes to cryptography. I think it's also on builders to make sure we're building really smart multi-calls. But I also believe that like we as like DeFi users have to own it a little bit and like do our due diligence, because like we are still, we're spearheading in the Wild West, you know what I mean? So we got to make sure we're being careful with all this freedom that we've been afforded.
Yeah, if I could just jump off of that, I thought you made really good points. And I absolutely agree. There definitely needs to be like user accountability and responsibility within the space when you're entering. But I also think with respect to the next billion users, as I think Johann brought up, and sort of jumping off of what Adam mentioned with institutions, there's a massive opportunity here then for your everyday users. And I'm thinking not about myself custodying my own crypto, I'm thinking about my parents, really. And although, because I'm in the space, right? And I'm in the security space. So I get to talk to them about what I see and the risks involved, and I get to answer their questions, right? So although they have a healthy understanding of the risks and how to securely store a private key, how to sign a transaction properly, how to review all the data before you're just clicking buttons and you're just sort of, I really want this NFT, right? And you're putting in a bid and you're like, go, 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 go. And you're hitting that button. My parents don't want to mess with it, right? They still feel safe using an intermediary. They feel safer using an intermediary. So I think when we're talking about the next billion, the next 5 billion, quote unquote, mass adoption, that it's really important at this point to include the institutions. And I'm not talking necessarily just specifically to financial institutions or non-bank financial institutions, which of course I think are critical to the mass adoption, but I have to include other institutions as well, government agencies, right? So sort of this whole approach, and I think in terms of onboarding, I think like consistency is key, right? So your companies, you're consistently building. We're sort of in the bear market or whatever. It doesn't really matter if you're a builder, you're still building, you're still creating, you're still improving user experience and security. Consistency. It's unfortunate, I think, that even over Thanksgiving, Christmas, and the holidays, even when I went and got my hair done the other day, when people learn I'm in cryptocurrency, the thing that they talk about is, he who shall not be named. And that person did a lot of damage within our community. And because education, we're still building that educational programs. CipherTrace just built one recently, Crypto Foundations. It's totally free to sign up. That said, people don't understand that FTX does not equal cryptocurrency, does not equal DeFi. It's sort of serving, unfortunately, as a straw man for I think arguments against self-custody. And I find that extremely frustrating. So that said, I mean, people entering into the crypto space might go through their trusted intermediary, right? They might go through their banker or their broker to trade or to make a purchase because they feel safe and it's something they're already familiar with that process. They don't have to learn anything else, right? So we have like Adam mentioned, the crypto cards, right? We have this partnership between Paxos and Mastercard, I think, which is launching within a month or something, Q1, I think. So banks can offer trading services to their customers, right? You can just log into your bank's app or log into your bank's platform and make a trade. I think, and using Paxos as the custodian, I think, as Johann, I think, also mentioned in terms of storing those key pairs, right? So institutions relying upon those trusted custodians already who are vetted in order to do that and offer those services for their customers who are interested or, quote unquote, crypto curious, but have extreme hesitations in entering this space.
Yeah, I'd agree on some of that market sentiment and damage done. It's to the point of having to use the term digital assets and digital identity instead of saying the word crypto in meetings, which is sad but true. I completely agree on the okay, trying to get people away from that. And on a lot of meetings with people who are asking questions, I'm like, remember cash, that thing you carry? This is digital cash. So in the same way you bear that responsibility for cash and you think about controlling your cash, you are self-custodying your assets. You should have that same level of scrutiny.
Yeah. We have talked about security, but I wanted to ask Alan about whether he sees privacy as a complementary feature that all crypto apps should have, given how easy it is to trace people's assets. So Alan, what do you think is the importance of privacy when it comes to these kind of applications?
Yeah, I'm glad you asked. And actually, this Kevin Rose instance was actually something that I was going to talk about, right? I think that there's something to be said about security through obfuscation, right? I believe that one of the he was targeted is because his wallet addresses and his balances are like explicitly known on chain, right? And having like a permanent, immutable disclosure of exactly how much money you have and where it is a pretty not so great thing to do. This is like burying a big pile of cash in your yard, putting a shovel next to it, and putting a sign and saying like, I have this much money, under the sign. But more to the point, I think it's not just like important. I think it's really necessary, right? And rational actors in finance expect privacy. I'm sure that no one, who's talking today or anyone listening for that matter, want to publicly share the live state of their bank accounts into perpetuity. I most certainly don't, right? I believe in the general rule of none do business is kind of where I stand on that. And I think that, current blockchains are pretty stark opposition to that level of privacy that we've grown to expect in traditional finance. And I also think that as on-chain analytics, increase in accuracy, this is going to become more and more and more of a problem. Folks like Chainalysis and Nansen have, very readily on Twitter and the like, touted that they can identify individuals just by a pseudonymous address, right? And this is a very dangerous thing in the wrong hands, right? And so I think a great way to solve this is, kind of what we're building, in Railgun, right? With Railgun, it's possible to use DeFi and NFTs and all the smart contracts that we know and love without, revealing everything about ourselves. And I also think that on the other side of that, a transaction state where balances and identities are public, this really limits the total addressable market of crypto, right? This is why a lot of institutional and enterprise people started to do separate closed blockchain systems, which ultimately most have failed, arguably, because of the privacy issue, right? Because it opens up potential security risks. It opens them up to, various regulatory issues around consumer data protection. There's a lot to be considered when it comes to privacy. I think that maybe GDPR is outside of the scope of this conversation today. But suffice it to say, I think a lot of people would be pretty shocked to understand that privacy is required to transact with data in a whole myriad of jurisdictions. And we do well to remember that, right? So we also have to make sure that we're taking privacy pretty seriously, so don't tell people that you're one of three on a multi-sig and where your wallet is, so they don't try to, I don't know, hurt you or have some sort of personal security concerns. But
yeah.
yeah.
Do you think there's a concern with, specifically, with projects like Railgun? Do you see like a concern with like AML issues? Like, how do you balance privacy with money laundering risks, for example? If you could briefly touch upon that.
Yeah, I think this is actually really great issue. It's a really great issue, right, to talk about, right? And it's actually one of the things that I think about as a contributor to a privacy protocol. My background is actually in more traditional finance. I set up passive foreign investment companies in the Turks and Caicos and Cayman Islands for many, many years. So dealing with like this kind of regulatory schema is kind of been something I've thought about for a long time. And having privacy creates a lot of challenges when it comes to establishing good counterparty risk, right? So if you're an OTC broker and you want to do your due diligence as you're obliged to by law, right? And someone is using privacy solutions, like how do you take and do that kind of due diligence? And I think that this is like cryptographically possible, right? It's just a matter of building this infrastructure. There's actually a really great protocol that exists today. It's called Chainway, right? And if you're not familiar with this, right, it in essence allows people to cryptographically prove that their funds out of a privacy protocol aren't the result of nefarious activity. And so I think that like if we look at like the overarching goals of AML and KYC, it's to mitigate bad actors from having, I don't know, money from their bad acting. And I think this is a very worthy cause to pursue, right? I believe that this is really, really good. I don't want bad people to have money, and I sure hate thieves, right? But I also think that like we really have to kind of consider like the way that like KYC and AML treat people who don't have access to like this kind of like documentation. I take it for granted. I'm in North Carolina. I'm an American citizen. I have access to some of the best KYC around, right? I can get documents that are globally accepted really readily, right? I have access to a myriad of financial products that are like mortgages and loans, and I can get one for 15 years, and it can be fixed rate, it can be variable, the list goes on. And we kind of take that for granted that that's not really globally like the status quo, right? I think that we really need to consider that like, the right to finance for people who don't have access to that kind of thing. And so I think what would be really interesting, right, on top of like cryptographic proving, I'm obviously very bullish on like zero knowledge, but I think it'd be really interesting for a lot of on-chain analytics to look at things like the network effect of things, right? So I believe, generally speaking, good actors interact with good actors. And I believe that like with good like analytics, we can come to a pretty reasonable understanding that like a particular transaction is of good intent. In other words, it's just a dude buying, let's say I'm a guy buying beers for Adam or something like this. We know Adam's a good actor. You don't have KYC on me, but Adam's a good dude, and he's probably not getting money from, bad folks. So I would love to see, sort of like, blockchain specific primitives around things instead of like AML and KYC, but more like, I don't know, maybe like KYT, know your transaction, because I think that's at the end of the day what we're after. Is the money transacting good or bad?
Yeah.
Yeah, please go ahead, Adam.
Yeah, I think it's absolutely kind of community specific and who you're acting with specific. Being an HT wallet, we're across kind of the whole ecosystem, right? Where from UTXOs and pretty deep privacy where nobody wants to, kind of Monero land where nobody wants to know anything about anything, all the way up to your example in ETH where, some people is, me.eth and it's plastered there with that sign, which is not good practice. I think there's some happy middles. We're kind of, a lot of this conversation is assuming ETH or EVMs just because it's what we all work on. It's easy to work on. Polkadot and some other systems I think are doing some pretty creative solutions relative to proxies and sub accounts so that you can, sign by proxy and then your holdings aren't there that are pretty interesting. I think it's all about choice. I think if you're going to interact with the big banking institutions and a lot of the space, you're absolutely going to have to be KYC'd. I completely agree with your point around access. I remember in grad school, I had a lot of international friends that would come in and wonderful people, PhD level people, and they didn't have records. They weren't of record in America and didn't have access. And, I want dollars to be spendable globally around the world in a responsible way. So I think to do that, we can prove it cryptographically while giving consumers choice. So at Arculus, and speaking for me even more than Arculus, I think giving consumers to control those funds across different chains is important. So if you want to act on ETH and be pretty transparent, that's great. If you want to go transact on Monero and be anonymous, you should be able to do that.
Yeah, exactly right. I think it's all about like end consumer choice, like that's like a lot of crypto, right? It's about self-sovereignty, right? And I think like having like optional account level privacy, like what we're building on, that's kind of what I believe in. Like people have the right to choose like who has access to their plain text data. I think that this is what's really, really, really important. So yeah, I agree with that, man.
Yeah, I'd like to hear from Jonelle. Despite being decentralized and anonymous, how do you see the future of custody solutions, adapting to the financial services industry, specifically in terms of like KYC and AML compliance, since you're, researching on that?
Yeah, I mean, I want to thank Adam and Alan for bringing up quality, diversity, inclusion into the conversation. I think that's absolutely critical to what we're talking about. We know that the data show that lack of user privacy actually creates bias against minorities, refugees, people with disabilities, the queer community, expats, right, as Adam just brought up here, or foreign students. So deterring access to government aid, access to education, employment, and to the financial system in whichever jurisdiction they've landed or they're living currently. So I think it will be critical then for, so I'm thinking B2C here, for those companies to offer financial products and products to users who choose to self-custody, right? And I would say, and not exclude those who choose to maintain their sovereignty and their privacy as well, right? Because as I think, as Alan just mentioned, there are ways around that, right? Like using zero knowledge, for example, right? Or perhaps there's a way to, for data silos or address or wallet silos for very specific uses for a specific institution, and not necessarily connecting your identity and your money and everything else, your blood type, right? Like, for example, with driver's licenses, when we have to show a government ID, we're giving up so much of our information. So I would like to see really customizable in terms of privacy, and then those products still offered to those folks. Now, I think with institutions and larger businesses, we're going to have to see, I agree with Adam, you're not going to get around KYC, AML, obligations, and especially not here in the United States, right? That's the reality of where we live. And so I think we have some pending regulations here that do concern me, again, going back to he who shall not be named, sort of standing up as the straw man against self-sovereignty and self-custody and privacy. I think that's a massive mistake here. I think there's a huge business opportunity for B2C to include those users who maybe don't have proper government IDs. There's a way to verify that a person is who they actually say they are, and that they're not engaged in any illicit activity here. So potential for maybe specific FIs or government agencies to drop like a verification token into your wallet, right? I think there have to be better ways to do that. But I mean, there are a lot of smart people working on this problem. And I think if we continue to work together and we're consistent about it, that we can move forward and create those solutions here so that it actually is inclusive and not just a value statement, right? But a reality.
Yeah, maybe
yeah, please go ahead.
So I just quickly build on that. I think referencing VCs, we haven't really touched in depth around decentralized identity, but it's a very important topic, and I think it has the potential and power to be deeply profound in terms of consumer access and institutional access. Some work we've done on this topic is sort of work with Verity. So it's the stand around decentralized identity and verified credentials, and allowing institutions to generate VCs that will live within their wallet, solving for essentially KYC. What you see today in DeFi is that you have these individual DeFi protocols that cater to institutions or individuals that offer under-collateralized lending and therefore requires a form of KYC. And what you have is sort of a broken user experience where you have to step through every single individual protocol's KYC process. And so what you can solve for with decentralized identity is, again, is a verified credential being issued by an intermediary or by an entity that does KYC, that VC being uploaded within a wallet. And that then allows the individual or the institution to protect their privacy, to move freely across different DeFi protocols, and therefore to connect to these DeFi protocols and present that verified credential to attest to claims being made, i.e. they've gone through KYC. This is obviously a very simple example, but you can extend out this example into providing far more sort of powerful solutions. I think we also need to be very thoughtful about the fact that VCs and DIDs are portable, but KYC is not. I think it's to Jonelle's point. JP Morgan is not going to trust Citibank's KYC process. Every single organization, if you are regulated, probably will require their own form of KYC. But I do think as we start thinking about building a new internet, a new Web3 system, new financial protocols, we can start from fresh on how we think about identity. And I think, we have a huge opportunity to sort of invert the current structure that we have now, where you have these data banks that control our data. And with Web3 and with the essential identity, we put the power back into the individual's hands. And we are very much enabling what we call digital authority. And I think that's fundamentally profound and very, very important.
Yeah, I want to hear from Adam about like the differences between, in challenges seen in retail and institutional users identity verification when it comes to like Web3 and crypto. What are your views on that, Adam? Like, and how is Arculus addressing those challenges, you could say?
Yeah, so coming from that world, before Compo, I was in defense. So I've kind of lived the world of PIV and CAC and complex certificate systems of how to prove you are you. Verity and other systems where we do, whether you call them soul-bound tokens or DIDs or all sorts of systems, I think are fantastic. A lot of our users, a lot of retail users don't understand what those are yet, and that's okay. What's the old joke? If you have 5 competing standards and you put engineers in a room to decide, you'll come out with 6 competing standards. So I think that's where we're still at in the space, and we have to kind of unify around that. The last point was made around, Citibank can't trust Bank of America's KYC. Not just they can't, they legally can't. Like, you have to do your own KYC. So it's regulatory wise, it's extremely challenging. So at the end of the day, what retail consumers want is to just not have to go through more steps and click less buttons. Like that is the bottom line. I want to click less buttons. The impact of that, they don't really care. It's just, I need less screens. I want to go do the thing I want to do. And that's the bottom line that we've seen with retail. Institutionally, it's risk and compliance. And everything else, for the most part, kind of goes by the wayside. So what we have to get our customers to, both retail and institutional, is here's the hardware, here is the certified software and firmware on top of that. That is why you're safe. That's why your keys are safe. That's why your consumers and users are going to be safe. That's why we're compliant. And then here's how to transact in a safe way that is easy enough for your individual consumers to use.
All right. Yeah, thank you. And I want to circle back to, these technologies. You've mentioned a few technologies, we could say like primarily focusing around zero knowledge proof, for example. So, Alan, would you probably, want to, brief us on, these technologies that are going to be important when it comes to like preserving privacy and ensuring that digital identity in the Web3 space, is secured?
Yeah, God, I wish we have a great cryptographer by the name of Hisham, who would definitely be able to give us like the best explanation on how zero knowledge works. But suffice it to say, I believe these to be pretty revolutionary tools when it comes to protecting identity. And I think that it's going to allow people to participate in like this new Web3 economy while like controlling what they what they reveal to people in plain text. This is going to be really, really important, I think, going into the future, because things like Adam just talked about soul-bound tokens. The last thing that I want to do is have the Alan Scott soulbound token tied directly to my 0x address in a public fashion. Like, this would be incredibly dangerous, right? You know, if someone comes and meets me, shakes my hand and says Alan Scott, and then they look at my Etherscan, they find that I have $1 million in my wallet or something like that, which I don't. I'm a very broke person, but suffice it to say, like, this could be very dangerous from a personal security standpoint, right? And so I think that, like, one of the things that we always need to think about when we talk about digital identity is, how do we like safeguard and like protect this digital identity, and like how do we keep like personally identifiable data from being leaked, like our friend GDPR we just talked about earlier stipulates that we can't do, right? We can't leak people's personal and like private data without risking incredible fines as enterprise actors. So I believe that like cryptographic primitives like zero knowledge are going to allow privacy and disallow bad actors from scanning the chain to violate people again, like Kevin Rose. Yeah, I'm really quite bullish on like zero knowledge being intermingled and intertwined into this digital identity space.
Yeah, and maybe for some people who are watching and are less knowledgeable about it, right? I think the classic example I always give is if you have a cryptographically verifiable credential and a bank needs to know something, you can return a cryptographically viable Boolean, right? You can, with a true signature, pass back a yes. Like, are you over 18? Yes. I can pass back a cryptographically verifiable yes without actually revealing my birthday, or whether it be medical information or something like that. And so I completely agree. ZK is amazing. Yeah. And we're talking a lot about finance, but I personally think in the insurtech space, like that, once that is available at scale, is going to be amazing.
Yeah, I mean, it's really heady to like talk about the non-interactive part of like specific like ZK schema, but it is like it's like magical moon math that allows you to prove something without like revealing too much information, which the birth date thing is a really great example.
That's how I explain it to my mom.
I'll have a go at that tonight.
And obviously, like, customer experience could also be one thing. So as we previously touched, we discussed, like, account abstraction could be another thing that might have to like take off in order to onboard users. So what are the views on that, on those kinds of features? Open to anyone?
Yeah, I mean, I'll jump in here. Look, tremendously exciting. Made to share with the audience. Account abstraction is an ERC standard that's being proposed. It has been within the Ethereum roadmap for quite some time. The aim is very much to sort of, if I had to simplify this, to sort of marry EOA, so external accounts, as well as contract addresses. And so what you're doing there is to maybe give everyone the TLDR is creating sort of super wallets that have all sorts of powers. What you're enabling a wallet to do essentially is have spending policies. You can set different permissions for different keys. You can split keys to do different things. You can have things called time limits on a key. So how long is a key active for in order to sign transactions? You can set policies that around the number of transactions, the size of transactions. You can have block lists. All the things that institutions essentially need custodians or self-custodial technology offerings to offer them is what account abstraction offers. Now, we're still a little bit far away from this sort of being implemented. What ERC 4337 is a implementation not at the protocol layer, but at the application layer. And it's being very much experimented on layer 2s now. And so there are a lot of wallets, including Metamask Institutional, that's building in account abstraction. And I think it's very powerful because it really hands power back into the individual and allows them to create user experiences, allows them to protect their assets in really important ways. Maybe sort of a counterpoint that I would make to this is that at the end of the day, I think we can get very held up in terms of jargon and numbers. And we need to come back to kind of the first principles of what are we trying to solve here. At the end of the day, what we're trying to solve for is making user experiences more seamless, abstracting complexity so that users don't even have to understand a lot of these things we're actually talking about, and helping them navigate Web3 in a more secure, seamless, and safe way. And so what ERC 437 does do is sort of solve for that problem. But I think you can solve for that problem in very different ways. You can use passkeys, you can use a whole range of technologies to abstract complexity. And so I think as builders in the space, I think it's sort of our responsibility to constantly be thinking about like, how can we build seamless user experiences? How can we abstract complexity? And how can we bridge, the next billion or next, 2 billion users or organizations into the space?
Yeah, I agree. The point I have, at least relative my viewpoint to that, is that it continued to be deterministic. So to your point, there's a lot of ways to implement that. I've seen a few proposals that kind of almost pivot back to Web 2. You abstract too much. The moment it stops being cryptographically key-based and deterministic, I'm stop being interested as a developer. So I think that's the minority. I think most people are keeping the core ethos of signatures and keys.
Cool. And I wanted to understand from you, Adam, like what advice would you give to, organizations or individuals, looking to implement secure authentication solutions, let's say in the Web3 space, both B2B and B2C?
Sure. That's a question. So, getting into it, there's a number of ancillary platforms you're going to have around your stack that are still very username, password type systems. And we often forget that. We're so focused on our vertical that people will leave their AWS wide open or something. And so I think, having key-based systems kind of in your Web 2-esque thing. So whether it be passkeys or FIDO standards or hardware authenticators, ensuring your core login is secure is important. And then as you do the Web3 part of your stack, it's the common sense stuff. Don't approve things, don't blind sign, don't give out your passphrase ever. Make sure you understand the duration of your keys, the duration of transactions, etc. So I think it's the biggest risk I often see with people is the ancillary systems, and that's how someone gets in and is a bad actor. I mean, I forget the GitHub stat of how many AWS East API keys are available in code and have been found in open source code, but it's staggering.
It's way too many is the answer. It's too many. I think that that's a really great point, right? And I think information is only as valuable and in proportion to its containment, right? So making sure that all of the externalities are kind of tied off you're talking about, right? But I think kind of one of the neat parts about it, right? Especially Web3 versus Web 2 is that you don't really develop, or you can choose not to develop these really large data lakes where if your individual security is compromised, it affects everybody else. So I think that's one of the bullish things that I'm really excited about in that differentiation between what we're doing in this vertical versus the rest of the tech space.
Yeah, and I would say diversify where your nodes are. So the joke or dirty secret is when AWS East has a bad day, or Infura and or Alchemy have a bad day, blockchain has a bad day. So diversify where the cloud is.
Yeah. If I could just jump off of that, Adam and Alan, from my experience as an investigator, right? So I think not having these large data lakes where all of our data is sort of stored wherever, even if they are at different locations, doesn't really seem to matter, does it? I think in terms of ransomware, it's just an easy target. We're living in a data-rich environment because this entire economy is created on us just sort of hemorrhaging our personal information. And that's what's going on right now. So I think in terms of privacy and security, being able to create those data silos for our private personal information, right? Only sharing what you want to share, using zero knowledge to share without actually revealing the thing that it is, I think is going to be absolutely critical into combating the problems that come along with oversharing, and one of those primarily being ransomware.
Yeah, we purposely segment on our consumer side. You know, if you buy an Arculus card, John Smith at wherever, and we have to mail it to you, I have no idea what your address is by design. I don't know what your pub key is. I don't know what your address is. I have no way to link a person to any address by design.
Okay, I'm going to read some questions posted in the Q&A box. Balaji asks, in the future, we're going to have many wallets, be it self-custody or institutional, government ones, banks, and others. So he asks, how does one manage these variety of wallets? Yeah, open to any of the panelists. How does one manage multiple wallets in the future? Also, while keeping the identity secure. I think that's what he's implying.
Sure, I think Bripe and anybody would probably give the same answer. Most are BIP39 compliant at this point, so you can take your recovery phrase and be pretty portable, right? Everybody wants to make sure they can interoperate with MetaMask and, you know, import a seed phrase that works and get the same answer. So I would say that's one way to do it. I would say try to consolidate. So whether you're wallet connecting in or MetaMasking in to your favorite platform of choice, you can probably condense those wallets. If he's asking about embedded finance, you know, as we see more wallets into big FIs, that's going to be a little more challenging because I'm betting that everybody will have their own proprietary flavor so that you're sticky and stuck in their platform. So you may just have to replicate your data, which is always bad. But if I had to put dollars on it, Citi and Jace and others, when they do their own embedded system, will have their own special flavors so that they increase that stickiness.
Yeah, and I think as product builders, it's important for us to create experiences, products that allow users to either connect in multiple different wallets, whether they be custodial or self-custodial, and then give them the tools to monitor, manage any assets anywhere. And I think that's something that's really, really important. You're seeing a lot of experience that have developed within Web3 over the last 18, 24 months. You have the Zappers, Zerions, D-Banks of the world that allow you to sort of control and manage your wallets across different platforms. And I think that those experiences are okay. They're pretty good. But I think there's a lot more thoughtful consideration needs to be given to how might a user have multiple different wallets and kind of manage those wallets. And that's something we do across institutions, across institutional wallets. It's not really sort of accessible for consumers, but I do think sort of, a lot of these features, a lot of these products will evolve and be given access to different user personas.
Right. Thanks. There's another question from Encrypted Broker. They asked, does MetaMask or Arculus have plans to integrate privacy features such as Railgun?
So there's a lot of things that we do on B2B that I will say are not public knowledge and are with very large institutions that I can't talk about. On B2C, we absolutely want to give consumers as much choice as possible. There will be a big firmware update and launch kind of in Q1 that we're adding some features, and we're going to continue to add features.
Yeah, I would love to see, I think one of the biggest lacking things in the hardware space is around the support of a lot of newer cryptographic primitives that are coming out, EDCSA or ECDSA, right? And this kind of things all supported, but you have things like Edwards curve, you have Jub, baby Jub, stuff like this. A lot of the new ZK tech hasn't really made it into the world of hardware, which I could definitely appreciate, especially when you look at some of the the battle testing that's happening around Plonk and stuff like this, right? There's definitely room for improvement on the the encryption side of things, but I think eventually I would love to see a lot more hardware support for all these CK primitives for sure.
So we'll have with the Crypto Nerds Online, when we're rolling out our next thing, we'll have ECDSA, EDDSA, Schnorr SIGs or Strato compressed curves. So that gives you vast majority of those implementations. And doing that on a 16-bit microcontroller is hard, but it works.
Yeah, it's not easy. Yeah, hats off to you guys for doing that. That's awesome.
I think there's a call out on the question, so I do want to answer it. So I definitely can't speak on behalf of the Metamask team. I can only speak on behalf of the Metamask institutional team, which is under my preview and permits. Absolutely, I would say, like, I think a lot of our users think very deeply about depth, liquidity, how can they transact securely, safely. And so a lot of things we're thinking about is going to solve them for those problems. So I don't think it specifically answers the questions around Metamask. But in terms of the user that we work with within MMI, Metamask Institutional, we think very deeply about how can we provide our users with that safe and secure access and that unrivaled access that they need.
All right. Yeah, that's awesome. I think those were some great insights, and I think we can wrap up that webinar at this point. I really want to thank all our panelists, Adam, Jonelle, Alan, and Johann, for their valuable time and wonderful insights. Yeah, thank you so much for joining, and yeah, have a good day to everyone. Thanks for joining again. Yeah,
Thank
bye.
you.